Hey guys, how's it going? It's Andy. Today I'm going to be talking about a growth stock that I actually like. If you watched my last video, you've seen that I have been making the switch away from growth stocks to dividend stocks because I think they give me more safety and stability as the market volatility continues to spike. But we're going to be talking about a stock today that was actually the first stock I ever bought. And after a really tough run in the past couple months and a tough earnings report that has pushed the stock down, it was 24% in one day, giving it its worst trading day ever. I think it's a pretty good option to add to an investment type of either a dividend portfolio, even though it's not a dividend stock, but I think it has the overall stability to fit into my dividend portfolio like something like an Apple or a Microsoft. Today we're going to be talking about PayPal. We're going to be talking about the stock that I fell in love with the first time, was the first stock I ever bought. We're going to talk about its last earnings report and why it got pushed down so far based off of this one report. We're going to talk about why I think it's one of these safer growth stocks out there and why I think everyone should consider looking at something like a PayPal or a Square, which has changed its name to Block recently, as a pretty integral part of their portfolio because I see the digital transaction space increasing over time. And then finally, we're going to hop onto the charts and talk about some of the charting that I did more than a year ago that has become relevant as the stock has plunged back to levels that we haven't seen in a long time. And I'm just going to talk about why I love PayPal for a long-term investment, whether it be in a normal investing account or in a retirement account. I've got to say this is not financial advice. And if you do enjoy this video, I really appreciate it if you hit that like and subscribe button. I'm trying to get my channel to 10,000 subscribers, and I need some help to get that done. So PayPal had its worst trading day, down 24% after earnings this past week. When you look at its year to date, it's trading at $126 and it's down 35% in the past year. Pretty tough. Then if you go back 6 months, it's down 55%. So PayPal has been crushed after being one of the most stable growth and tech stocks out there. When you look at its returns for the past, pretty much since it's gone public, last year, 2021, was the first time that it actually had a negative year. Every year before that had always been positive. So we've had a company that's had the track record of doing incredibly well as the overall market has sold off and growth stocks especially have been hurt pretty bad. PayPal has gotten taken down with it. But let's talk about that last earnings report because that's one of the main catalysts that pushed it down so far and really brought it back onto my radar as being a stock that I'd love to add to my portfolio. So let's talk about that last earnings report because if you see the headlines, it looks pretty bad and it makes sense why the stock fell so much. You see worst trading day of all time, down 24%. You also see stuff about them missing user growth targets, in part because they had 4.5 million illegitimate accounts that joined the platform. And you look at it and you're like, okay, this kind of seems justified. But the more you look at the earnings report, I think that the sell-off is not justified. And I think it's a fantastic buying opportunity. So let's go through some of the earnings and some of the important numbers that popped up. When you look at PayPal, it has been incredibly impressive at how much growth they've seen. 2021, this was their quarter four, so we get a full year of data for 2021. Their total payment volume, which is TPV, reached $1.25 trillion. And you're going to see stuff about revenue excluding eBay because eBay was one of the more integral companies when it came to PayPal success. They grew up together. They have since split off. And recently there was some changes in their platform with eBay where users can buy using their PayPal account, but sellers are not going to be credited into their accounts. It's going to go straight into their bank account. We'll talk about that a little bit later, but that's why you're going to see ex-eBay a lot in this earnings report. You see total payment volume, excluding eBay, grows at 29%. That's pretty impressive. 2022, they see it growing to $1.5 trillion and revenue exceeding $29 billion. You see their fiscal year of 2022 revenue growth expected to be around 19 to 21% from this report. Some of the other articles I've seen has talked about them missing their expectations from the analyst expectations, but still you're coming just short of 20% revenue growth. If this was any other company, that'd be a huge positive. So you still have these crazy expectations. It's just they didn't meet the analysts' expectations. Revenue excluding eBay has grown at a compound annual growth rate of 24%. And the trajectory, they see acceleration throughout the year as eBay drag diminishes, comparisons normalize, and incentives continue to contribute. So you see this growth, it's going to continue, and they expect it to continue. It's a little lower than the analyst expectations, and that was part of the reason why it got pushed down, because you're going to see people talking about, they missed on their guidance. They're still expecting 19 to 21% guidance. Their free cash flow, they bring in a lot of money, approximately $6 billion expected in the next year. After in fiscal 2021, they brought in $5.4 billion. That's 9% growth and 21% of their revenue. So The amount of revenue they're bringing in, 21% of it is being converted into free cash flow. It's a very healthy percent. When you look at their full year summary, they have 426 million active accounts. They had 49 million net new active accounts in the past year. That's going to be described as NNAs. Customer engagement, you have 45.4 payments, transactions per active account. So people are not just using this as a one-off. The average account is doing a lot of transactions per year. As I mentioned, total payment volume is up to $1.25 trillion, which is a 31% growth on a year-over-year basis. Revenue at $25.4 billion, which is an 18% growth, and compound annual growth rate over the past 2 years of 19%. Free cash flow is up 9% year over year. So when you look at all these numbers, they're all continuing to grow. And it's one of those things where you see the headlines, it makes sense why the stock falls, but when you go and actually look into the earnings report to see what the numbers that they actually put out in their guidance, I highly recommend doing this for all stocks. You can Google the stock, investor relations, and it'll pop up the last earnings report and the presentation that all of these news sites are getting their information from. So I highly recommend doing that in the future. So PayPal continues to grow. And when you think about some of the competition, a lot of people, whenever I talk about PayPal, they bring up Square. They're like, Square is the way to go. So I want to talk about the comparisons to Square. PayPal is the most accepted digital wallet. From this graphic, 76% of online retailers across North America and Europe accept PayPal. The next highest is going to be Apple Pay at 27%. So when it comes to the digital merchants, this is PayPal is the king, and the other ones aren't even close. And then when you compare it to Square, I guess it's now technically Block, PayPal is a significantly larger company. When you look at all the growth metrics, when I put up PayPal's annual revenue, they were coming in 2020 of $21 billion. When you go over to Block, let me find that. Block's revenue, which is Square, was sitting at 9.5. So PayPal is a significantly larger company. They bring in a lot more money. They've been around for a long time. When you look at PayPal's revenue growth, it has been incredibly steady. You see at the very bottom, all those green candles mean that year over year, they're seeing quarterly growth. So they have never had a quarter where they've had a drop in quarterly revenue year over year, which is one of the most impressive things I've ever seen. PE ratio, which is price over earnings, is not a great metric to look at growth stocks a lot of the times because growth, you're just expecting exponential growth. So these metrics don't really carry that much weight. But as we've seen the switch recently into going into value and companies that actually bring in revenue and a positive net profit, I think PE ratio is going to become more important because it has not been important for the past 3 years. So this graphic right here shows the price at the top, earnings per share, and then at the bottom, you're going to have the price over earnings, which is going to be the PE ratio. As you can see, the PE ratio is down around 30, which is lower than it's been in the past couple years. And so that shows that it's a pretty good value based off its historical range. Earnings per share is still up, price is down, that's going to lower the PE ratio. When you want to compare that to Square, Square is in a different stratosphere when it comes to ridiculous valuations. Here it is graphed compared to PayPal has been a public company longer, so that's why PayPal's data is going to go back further. But at one point, Square was trading at a PE ratio of around 500. PayPal trades at a pretty high PE ratio, but it's nowhere near those valuations. And I think that's why, as people are switching over to value, I think PayPal is a much better option than something like a Square. I'm going to continue talking about PayPal and not Square. I don't mind Square. I think it has its positives. But overall, if I was going to pick one over the other, I think PayPal is in a much better spot. So let's talk about why I think PayPal is a good buy in this time as we're switching towards value. PayPal is a company that's been around for a long time. They have incredible revenue growth. They bring in positive net income, which allows them to weather these crazy drops and changes in volatility. So let's talk about the net income. This is the amount of money from revenue that's being converted into the free cash flow. You've seen continual growth. This is slightly lagging. This is from fiscal year of 2020. We just finished 2021. But they brought in a positive net income of $4.2 billion. It's a very profitable company. And I think as people are switching towards value, I think you can categorize PayPal more with the companies like an Amazon, an Apple, a Microsoft, because these are companies that grow at a pretty impressive rate, but they also have the fundamentals to back it up. When you look at some of these companies that did well in 2020, they don't have positive net income. They're kind of going off of the expectations of the future. PayPal has crazy high expectations for their revenue growth being around 20% in the next year, but they also bring in a lot of revenue. They have, they're the leader when it comes to digital payments, and they bring in positive net income. So that's why I'm categorizing them as a safer growth stock. They're not going to grow at a 1,000% clip like some of these other companies, but when we're looking for value, I think PayPal can compete with stuff like Amazon, Apple, Microsoft. So that's why I have it there. From their last quarter, let's talk about some of the key metrics. People want the big takeaways. They have 4.25 million active accounts, 5.3 billion payment transactions, 340 billion for total payment volume in the last quarter, and as I mentioned, the 45.4 payment transactions per active account. Now let's talk about what I see on the chart that makes me so excited. I want to disclaim that the stuff that's drawn on this chart, I haven't touched in at least 9 months. So this isn't, I'm just going in and drawing lines that really push my argument. This is stuff that I've had drawn for a long time. So as the stock continues to go up, it's hard to graph on the charts and decide when is a good time to buy in. I want to put up the PayPal chart right now and show why I think this is such a fantastic opportunity. Because as the stock has fallen, it has gone back to previous levels that have been respected as supports and resistances. At this $125 mark, which we've just gotten to after the 25% drop, this is an area that's been respected as a resistance in the past. So let's see, this is back in July of 2019. It was unable to break through it. Then in February of 2020, unable to break through. Then we get to the earnings report in May of 2020. One of the great ways to break through a resistance is with a earnings report. There's a catalyst that can push it through these areas where it's had difficulties getting past in its historical range. Now, as we get to the point where PayPal's been following, one of the common things you'll hear is that previous resistances become supports. So after this last earnings report, the stock falls. Then on the past 2 days, we've seen some positive numbers with the stock bouncing off that $125 mark. So it's really setting up well over that support. So if the stock falls through this, it might continue to fall, but as a buying opportunity right now, this $125 mark seems very attractive, and if it respects this, you have a long way to go to the $310 of its all-time high. So this is a pretty rare combination of a growth stock that does well, a stock that I've loved in the past, and is relatively safe compared to some of the other stuff. So very curious to hear what you guys have to say about PayPal and its recent decline, if you think now is the time to buy in or if you're waiting for things to happen in the future. Thanks for watching. I appreciate all the support, and I will see you in the next video.